Already a third done. That's amazing. The government shutdown's a week and a half into effect. What does that do for us? How does that impact the mortgage world and real estate in general? We'll hit on it. Right now, the good news is kind of status quo, the same as it was for this past week, but there's more to come. So let's talk about things real quick. Rates, they're up a little compared to what they were. Here's the chart kind of showing the sideways move. Not as great as they were, call it this time last week, but that's okay. Still good, trending, big picture, still trending the right direction. You guys can see on this chart that again, the black line, the brown line, they're all coming up. That's a good thing. The purple's coming up, the blue's coming up. So we're trending the right direction. The trend's our friend. The government shutdown, right now, like I said, FEMA, like if you're in a flood zone, which North Texas, fortunately, most of us are not, unless you're on the lake or something like that or near a river. Not a big deal. I will tell you that I did hear and read that mid-October, so starting like let's call it next week, like air traffic control and stuff like that, FAA, like they'll get 50% of their pay, and then at the end of the month they'll get zero. So I suspect things, based on what I read, said it may be like this for another couple weeks because until people get really pissed off that the government shut down, there may not be a lot to fix or a lot that they're going to fix right now. So time will tell. But from a mortgage standpoint, like I said, for the most part, for the majority of loans, still kind of business as usual for this very minute. The Fed minutes were released. If you don't know, the Fed minutes are when the Fed does meet and they cut rates or they do whatever they do. When they meet, they come out and basically say, kind of, here's why their decision was there. Nothing overly interesting based on what we've already talked about. The only part I bring this in is they actually going to start talking about AI and how it's going to impact jobs. To me, I understand there's some impact. I don't think it's big enough yet to make a major impact, but it is interesting that that is at least part of the Fed's conversation. And there's still a lock for basically October 29th for a Fed cut coming then. So we shall see. We'll keep you posted. But here's some interesting things on real estate. 17%, that's one, and I think, yeah, one in every six sellers dropped their price in August. One in every six, which is, I guess, typical home sold for 3.8 below asking price. I got to be honest, like, and I'm not a realtor, so if you're watching this and you're like, hey, I know the exact number. Historically, dropping, I think it's between 3 and 5% of people, like 3 and 5% price drops historically. So I don't know that that's exactly some big like monster news, but the reality is one in six sellers are dropping their price in August, and inventory is still really tight in a lot of markets here in Texas, North Texas. We do have a lot. Builders are sitting on a lot of inventory. So good news, bad news, I don't know. But I was with realtors today, a handful of us doing a mastermind group, and they were like, man, we need buyers. And they're like, man, if they get a seller, they're kind of like, oh man, this stinks because it's hard to sell a home right now. You're competing with a lot of different folks. Inventory is high here in North Texas. It is what it is. But that's something interesting. As far as where to buy, I thought this from an affordability standpoint was interesting. These are the cities where the cost of a home is under 10% of the wages. So at this point, according to these stats, 33% of the household's income goes towards homeownership. 29%, 29 to 31 is kind of been the numbers that the mortgage industry has kind of had. So it's up obviously from an affordability standpoint to 33. Monthly average cost, housing cost, 2,100. And New York has the most expensive, apparently, Kings County, 113% of local wages. That's crazy. And Cambria, if I'm saying that right, in Pennsylvania, the most affordable. That's only 10% of the actual average wages. That means either they're making boatloads of money or the houses is real inexpensive. We're going to assume it's the latter. 34% of counties, meaning one in three, exceeded 43% of the wages. Crazy. It's expensive. It is expensive, but rates coming down will hopefully help us. I didn't know this. I heard this today with the realtors I was hanging out with, so I did some homework. And sure enough, ChatGPT and Zillow have gotten together to where Zillow's now made it to where ChatGPT can pull up their stuff. So I'll be playing with this in a few days, but I thought it was interesting. At least we're sharing. The rental reports, this was interesting. 2 years, 25 straight months of year over year rent dropping. That obviously can be kind of some reason why folks aren't buying as many homes because, again, affordability becomes a thing to where if rents are dropping from an affordability standpoint, it sounds good. And I'll show you a stat here coming up on that. But the studio, or pardon me, the average two-bedroom apartment is 1,900 bucks, 1,897. So again, this is great stats to have because again, if the average, mortgage payment on the previous slide was 2,200 bucks. I mean, yes, it's not to say a couple $100 isn't significant, but at the end of the day, home ownership versus renting, there's a clear winner there. I thought the other one that was interesting, 60% of renters plan to buy a home over the next 1 to 2 years. That is pent up demand if I've ever seen it. That is crazy to me. How many people are actually doing this? And going to the next slide, why are you moving into a new rental home? 27% space, need more space. 27% also more affordable homes. That kind of goes with the slide we just showed you as far as, rents coming down year over year. But the rest of this, guys, apartment can't fix it, right? Looking for different neighborhood vibe. Current living arrangements are no longer available. Moving for work, meaning affordability is not really, I mean, it's 27%, but that means 73% of the reasons are not affordability. So there are reasons why people are doing this. Downsizing, people can downsize homes too. So the point is use these. If you're doing marketing, I know my team and I, we talked about this slide earlier. We're going to really start focusing on these things to try to just, hit those reasons, find those pain points, and how we can help solve those problems for me. The 27% affordability rates over time can maybe help that, but the rest of it, there are solutions to it, and that's what we are here to do. Product of the week, we are doing a ton of refinances. We're not doing a ton of refinances too. We got a lot of folks where we say, hey, not yet. But the ones where it makes sense, we're doing them. And a lot of times it is the no cost refi versus the unicorn. There is such a thing between a no cost refi, air quotes, that you'll hear other companies say, and then truly a no cost refi. So don't fall victim to the one that sounds too good to be true. They can exist. It's hard to do it in this market, but again, check this out and let us know if you have any questions. Happy to answer anything that comes with being a unicorn versus what's actually real. All right, here's the berries. I thought this was just freaking interesting. I swear to you, my kids, my family. So part of this was downgrading to save for down payment. People are starting to buy less expensive berries, and the article I read said that if a household makes less than 100 grand, I think it's between like 40 to 50 grand, they buy 50% less berries than households that make 100 grand or more, because berries have gotten really freaking expensive. It's $12.6 billion. They average $53 a month on berries. I know my kids just go through them so much so that I'm not allowed to eat them. Caroline says that it's for the girls, not me. It is what it is. I take a little offense to that. I hurt, but the reality is it's their berries. The blueberries, not mine. But if you want to read these stats and take a second look at them, I think it's fascinating. But I won't spend too much time here. I don't know what your hun, whatever that is. I sent this to my team. I think they put it in here to be funny. But whatever it is, Sabrina Carpenter. Apparently, Sabrina Carpenter smoothies is what they are. And they can be as much as $148 for a celery juice shot. I don't get it. This is a slide to prove how old I am and how I don't get it. But they are going to do shipping. Initially, there was vibes that they was coming to Dallas, but that's not the case. They're just going to be shipping. And then I thought this was phenomenal. Halloween house that got fined by their HOA. So that's really good. Kudos to you. Mortgage success, Justin. Well done, my man. Getting a shout out here for this week. The expertise, strong relationships, everything to be smooth and fast. We appreciate that. We appreciate you and appreciate those that think of us. And then, as always, guys, get social. Come on. Share, subscribe, forward. You know what to do. Help us out. Help us help you. We appreciate you. And yes, I'm catering, pandering, and begging. Beyond that, enjoy your day. Again, already a third of the way through this month. We'll see you next week. And if you need anything, just remember when you think mortgage, think Mark.